Hi and welcome to the market view for Wednesday the 26th of February 2014. And starting off with the daily chart, we can see that the market is still not doing an awful lot. It keeps attempting to move higher, but is struggling slightly. Let me just zoom into this a bit more for you. And then bring this across there. So again, this morning we can see we're starting off green, which we did yesterday morning, but the market traded higher but failed to hold on the highs. Let me just remove the crosshairs for a second as well. So the market traded higher, came back down and settled down on the 166.50 line there. So the support yesterday, the psychological support, was 166.50, and they're very interesting areas, these psychological areas. That's why they're placed on the chart and highlighted. And you can see the market trading between these sort of areas. You know, it trades through, then it comes back, and then we saw the 166 area on Monday, how the market bounced off this twice, traded through the 166.50. Managed to hold, and now that's become the support, and the market's moved higher, driven through the 166.50. Sorry, no, the 160. I'll get there in a minute. 167, and now that's become a resistance area as well. So the 166.50 area should be the support for the market in the longer term here, or in the bigger time frame there. So the market is stuck in this sort of trading range. It's trading between, you know, the sort of 50-point ranges through and then coming back, which it has been doing now for the last few days. So very, very frustrating in the way that it's actually trading. If you look in the smaller time frame of the 30-minute, you can see that yesterday afternoon the market, from the 3 o'clock news in the US, the market straight back down to the 166.50 area, finds support. Again, we see the volume move higher, and then the market back up, and then it comes back down, and you know, it's stuck in this sideways range because there's no sort of major news driving the market at the moment. So speaking of news, I mean, we had a couple of potential trades yesterday, neither of which were actually filled, even though the market moved higher. So just before I switch to the news, actually, let me just go back to the daily chart, and let me just throw something else in here for you as well. Just going to go to the markup, and I'm going to look at the fib extension. And what I'm going to do is to click on the high down to the low and just mark in where, should the market continue to move higher, we could find a bit of resistance. So we're looking at 167.30, so the 167.30 area, and the 167.64 as well. So, you know, there's going to be resistance in this area. Generally there is, with a 76% retracement there. So I just thought I'd pop those on there. And the reason for using this, as you've seen in previous market views, is purely and simple to measure the momentum and how much strength the market's got when it has had a pullback and then attempts to move higher. In its simplest form, failure to close above the 76% with red candles will indicate there is potential weakness in the market, and we are likely to see a resumption of the downtrend that started here. So what we're doing here is just measuring the strength back in the market there. Let's just have a quick look at the news that is out today. We've got MPC broadband to speak at 9:25 for the UK, second estimate GDP, so we should get a bit of a move today. The forecast is 0.7, same as forecast there. Prelim business investment also at 9:30, medium impact, and new home sales for the US to show a drop at 3 p.m. there, and crude oil inventories won't affect the market at this time. Crude oil is very quiet at the moment. So a drop in the new home sales in the US from 414 to 406, which could put downward pressure on the dollar and the pound moving higher. However, as I've said recently too, that the economic news items where they should be positive for the currency that it is released for has actually had the opposite effect. So it's a case of having to let the market tell you what it's actually doing. Now, just before I conclude, received a few questions, so I thought what I would do is actually answer these in the market view instead of sitting and typing them. And they're from subscriber call Mark, so thanks Mark for getting in touch. And the first question for Keith, as this section wouldn't help be known, if anybody's got any questions and you know, and you want me to answer them in sort of in the market view, then feel free. So the first question is, Mark wants to know what time frames to actually trade the Oz dollar. He said he noticed I used the 15 and the 10 minute as well. Well, it's down to personal taste really, and preference on which time frame to actually trade. I just prefer longer time frames, and I still trade a lot of commodities and things on a positional basis, so I put the trade on, know what the risk is, and I go away. And it's the same with the currencies. I do tend to prefer the longer time frames. However, if I am at the desk and the market is trading in a sideways range, as we're seeing at the moment, then I will switch down to a smaller time frame and use the daily pivots, the psychological areas that we've seen earlier. And also, as you can see here, there's a couple of indicators that you've probably not noticed before. We've got a diamond and a PTP. Well, it's a triple X, which is available here. These are the triple X's, and here is the setting that I'm actually using in this 5-minute chart. And what this allows me to do by using these settings in the smaller time frame is to grab just 10 pips. It's not designed to stay in there all day, and where they've gone dark is because I've managed to grab 10 pips. This setting, these are the settings, so you may want to pause the video if you want to actually have a go with these. That's what it is for the triple X, which is the diamond one there, and the PTP setting is also, the intensity is changed down to 2 as well. Again, pause the video if you want to have a look at these settings in more detail. The trade calculation, or sorry, the trade markup, not the trade markup, it is the trade calculation, is the initial stop is 25%, and where's the triple X? It's in here somewhere. And these are the settings that I'm actually using for the triple X, and the one I was interested in actually was, if I can find it, is the scalp line 13, and the reason for 13 pips is so that with minus the spread with the pound of 3 pips is a 10 pip trade. So that's how you manage to get the 10 pips, is by having a scalp for 13. So I'm not going to go into too much detail here. If you actually just go back and pause the video, you'll be able to adjust these settings so that you can use them if you wish to. So I'm just going to slide this up a bit so you can see this, so you can pause it. And now if we just go to the PTP trade calculation, you'll see that there as well, and the scalp line is 13 there as well, and there's the other settings. Again, if you pause the video, you'll be able to take these straight off the page. So for the smaller time frames, Oz dollar or whatever, this is what I tend to do, and of course I will use the volume as well. I can see the buy-ins come into the market here. The selling's now disappeared, so I know there's a bit of a move. We get the move, we get the selling return, and then the market, again, look at the psychological lines here. Look at the psychological lines here. So you've got this support coming into the market, and once you get used to using these sort of psychological areas, the pivot resistances as well, you can actually see how the market's trapped between the two here, and then it finds support here on this one, but eventually you get a red candle that breaks through, it tries to come back, and then eventually it moves lower. It doesn't go quite down to the close there, but this is just the overnight market, and you can see again how the market seems like a magnet and attaches itself to these lines. And I'll just move the chart over, and you can see how it's weaved back and forth through these areas, and now it's actually managed to move higher. We've got the volume coming into the market. It's early on, and we've got a bit of selling around at the market, but now the market's found support at the daily pivot. So Mark, in answer to the question, it's a case of choosing a time frame that you're comfortable with, whether you can sit there to actually trade it as well, playing with the settings in the in the TUFXP panel there and adjusting accordingly, and you'll find, as you see in the 5-minute chart, when you're not getting signals in the longer time frames because the market's stuck in a sideways channel, you will see these potential trades there. A bit of a loser there, and that's because the market found support down here and then traded back. But again, you can see the winners here, and then there'll be a few more for the previous day as well. There you can see a good run up there when we were at that double dip that we had on Monday. If I just drag this across, you can see there. And what you're looking for, it has to be a PTP and a triple X here, and you can see the short there that we had, and then the long as well. Even though we didn't get a signal in the 30-minute, we picked up a lot of points in the smaller time frame. But it does mean, of course, that you are likely to be more at the desk, and if that's your trading style, then give it a go. The second question is that Mark has asked is how long, or what is the times for the trading session for the Aus dollar? If I remember rightly, it kicks in around 10 o'clock at night, so it's a case of trading overnight for the Asian market. So if you're an insomniac or a night owl, then you will get the moves for the Australian dollar overnight. That said, of course, the interesting thing is with the Australian dollar, it's going to move with the Northern Hemisphere anyway. But the sort of initial moves on the overnight, as you'll see here, let's just have a look. This is sort of 1:20 in the morning, 11 o'clock at night. So it traded sideways, and then about 1:20 it moved, made a bit of a move and whatever. But then if you look at the day session for the Aus dollar, it moves a bit more, again trading between these 2 points. So it doesn't really matter. Even though it's an Asian market, you think you'd have to stay up all night to trade it. It will actually move, and it certainly will move on the news, which you can see there. There's some news last night for this market, 23.50, and then the market put in this support at the support 2, and then has moved back up. So, it trades during the day and during the night as well. Good move, certainly last night or during the day in Australia. And the final question that has been asked is, why do some of the volume bars stay grey in colour when there's very high volume? Well, the reason for that, if I can find one, here we go, we've got one here. The reason for that is quite simple, Mark. The price bar determines whether it becomes highlighted or not. And what I mean by that, it's where it open and actually closes. Professional buying bars will open in the sort of lower third and close in the lower third, or the top quarter and bottom quarter. It just depends on which type of bar it will actually be. But what you're looking for, if it doesn't colour green or red, it's because it's not opened or closed within the top or the lower third, which generally is the characteristic and criteria for a professional buying bar, because as the market moves higher, it's generally driven and it will close on the highs, as you see here, and the volume is shown there. And if it comes off the highs, it's not actually professional buying, which is why this one is shaded in grey, because it's some selling's come into the market, which you will see if we just nip down into the smaller time frame and drag and there you go. You can see the selling came in there. This is off the highs, and by the time the 30-minute bar's completed, we're down to this sort of area, which gives us the market coming off the high there, and then through that DP level, the resistance 1 level, down to the previous day's high. So that's the reason behind that. So that's why some are grey. It's because they don't quite meet the criteria for the candle, which for professional buying bars or any of the other bars, they all have their own criteria as well. Should be open in the lower third, close in the top third, or the bottom quarter, top quarter. So as you can see, this one didn't, and therefore it remains grey, which it should do, because it's indicating to us that there's some selling around. Had it have stayed if the market had closed up here, then it would have been green, and that would have shown driving through this psychological level here of 167, 167 to the dollar. But the market failed to close above it, and again, psychological area, clue already, the market's struggling. Red, red, green, failing to move higher on low volume. That's called no demand, so there's no demand to move the market higher. More potential weakness there, as the market, again, just not moving high. It's now presented not only a psychological level, but a resistance level, and then the market drives through, and then down we go. Okay, well, I'd better shut up and let you get on with your trading day, and all things being equal, I will see you tomorrow. As ever, thank you for your support. It's very much appreciated, and thanks for watching.